Good morning, everyone. Happy summer.
You are a man of the world. People know you, of course, as running Blackrock, but you're around the world constantly. I want to posit something. Is the United States in the strongest position you've ever seen it versus all the other countries you go to?
Relative to the world, we are in an incredible position. Our innovation, our technology, our entrepreneurialism has really fueled an incredible growth period for the United States. And I think it's showing up. It's showing up now in the development of AI. We are the ones. It showed up actually in mRNA, shows up in many other technologies. And I think we're just more resilient. We're a very emotional country.
Yes.
And when we have problems, we're more cathartic. We actually are, because of the democracy and the conversations we have in our country, we're more resilient in terms of identifying problems as a country. And as a country, we cauterize our problems faster than other ones. In many other, we saw after the financial crisis how long it took Europe to admit their structural issues. Correct. And so I think that resiliency and that openness, we all know that democracies are messy, but through that debate, we solve problems faster than most places. There are times when we're all frustrated and we're all, concerned, but the reality, the resiliency of our economy, the openness of change. I know change is hard for some, but our economy is based on change and evolution and recreation. And I think about that all the time. And we position Blackrock for that type of structure, that we're constantly trying to evolve and stay in front of our clients. And we believe the companies, the industries that are constantly evolving and changing, adapting, and helping their clients as they evolve are the net winners. And if you look at almost every industry, we have more leaders in more industries than any other place in the world. Now, if you also add the fiscal stimulus of the Infrastructure Act, and we have really bad infrastructure, so we needed to do that. Right. CHIPS Act, the IRA, that's all starting to come into the economy. So actually, I think our economy is going to accelerate.
Is it going to accelerate fast enough, Larry, to start paying more to generate more revenue? Because our interest payments are going to soon be the largest single component of the budget. So it's great to be positive on the country, but there are plenty of issues, including that one.
David, I totally agree. Our deficits are out of control. And now with higher interest rates, yes, interest payments are going to be a major component of that. And that's going to put a lot more pressure on our programs, our defense budgets. All these programs are going to be really at risk. The only answer to that is growth.
Right.
Okay, if we have 3% growth, we're going to be able to solve some of that. If we have under 3% growth for a long period of time, the interest payments as a part of our budget is going to overwhelm us. But that being said, the dynamism of this economy at this moment is stronger than any place in the world.
See, I think when we look at what we do, when we talk about business every day, we don't celebrate the greatness. I look at the people you deal with. I look at the business people you do it. They have a level of optimism that transcends and trumps both the politicians of our country and the world, but even our people. Now, I look at how much money you're taking in, and it makes me feel that there is more optimism and belief out there than anybody does really feel. That's in the media, at least.
I think the optimism is muted, though, if you use our flows. If you look at our flows, the flows are heavily fixed income oriented. Now, this is an opportunity that we haven't seen. A couple of statistics that I find really interesting. On December 2020, about $18 trillion of bonds had negative interest rates in the world. Today, 80% of the market has a 4% interest rate or higher. We haven't seen that in so long, and that's what's stimulating very large flows. We're seeing that at Blackrock, both in index and active fixed income. We have now $7 trillion in money market funds. A record level. Now, if that money is put to work, that will be an extraordinary benefit. When money is being saved in the short end, that actually is a sign of fear. Okay, because you're not putting it as actively in the economy. You're consuming less. And so the thing that I'm going to be watching for ultimately, are we going to see some of that money in money market funds move back into equities or move it more into fixed income?
The Treasury's going to need it, Larry, because they're doing a lot of issuance back to what I just asked you about.
No question.
And
that is one of the concerns I have. The Treasury is going to be issuing much more in the short end.
Right.
And because of higher interest rates, we're going to see more defeasance of pension funds. And so the demand for the long end is going to be large. So to normalize our yield curve, it's going to be hard for me to see that to happen anytime soon because of the absolute supply of treasuries.
Right. Although you were so early, Larry, in drawing people's attention to inflation and how that would be a stair-step function coming out of COVID, have any of the downside surprises this week impressed you at all?
Not at all. I mean, I believe our inflation numbers that came out this week were an example of lower energy prices, and importantly,
This happens just every day.
okay, good, new for me. There we go. Lower energy prices, lower car prices. If you look at now, like Carvana, their stock increase, are we over the decline in used car prices? If you look at the home builder stocks, record highs this year, are we starting to see a renewed activity? As I said, with the IRA, the CHIPS Act, and the Infrastructure Act just starting to hit the J curve, the demand for workers is going to be extraordinary.
Well, if we were at 6% unemployment, we'd be in terrific shape, be able to handle this. We're at 3.6.
And I think we can go to 3.4, not 3, not 4. And that's why
That's going to keep wages
much higher. And
Jim
that's
says it
why-
all the time.
And that's why I think interest rates or inflation is going to be stickier. And I think we saw a low because of that. I think the next $5 to $10 of energy prices is going to be up, not down. And you talk to the executives in energy, that's what they're saying right now. And so I think we've seen a low in inflation, and I think inflation is going to be sticky between 3 and 4%. And if I'm right about the job creations and the need for labor and what that's going to elevate wages, we're going to be in a period of 3 to 4% interest rates, inflation, which will translate into a Fed that I think is going to be reluctant to turn off their platform of raising rates.
So it doesn't sound like you're counting on a lot of labor displacement from AI and so rises in unemployment.
Ultimately, I actually do believe that will happen, but I don't believe that's happening at any time soon. I think that's a year, 2, 3, 4 years away. I don't see that happening now. AI has huge potential. It is going to increase productivity. It has a lot of potential, but how we adapt it, how we organize ourselves, I don't have the answers yet. I mean, we're all studying it. We're all putting huge teams of people on this, and we all see how we're going to adapt to it. I mean, we're looking at it quite extensively. We have our platform that uses natural language processing already. We look at that. We look at big data analysis, and we're looking at how AI can accelerate that.
I wanted to ask you about energy.
Yeah.
Because we had a deal this week. Exxon buying
Denver.
Loves
Yeah.
it.
I mean, listen, it had been something we'd been thinking that might happen in terms of carbon capture.
But it's exactly what I've been talking about.
Yeah.
We have to be working with our energy companies. They own the geology. And what Darren was talking about, now he owns the pipelines that put it into their geology. I think it was a brilliant transaction. We have, at the moment, one of the largest sequestration projects in southern Illinois, Navigator CO2. I mean, this is where I believe we have to be working with energy companies. And this is another example how we have to move aggressively to make sure we have energy security, but at the same time, we have to aggressively move in decarbonization. We are seeing more opportunities in decarbonization, whether it's working in Australia, building the biggest battery storage facility. We're working with a few other governments on those type of projects. We're spending more time working on biofuels to create natural gas.
Yeah.
I mean,
But the
But,
risk
Larry, when it comes to like ESG, I know that's a dirty word now, whatever we say it is.
Correct.
I think of Exxon, for example. My friend Jeff Ubben is on the board,
Yep.
right? He has a fund basically that's supposed to be focused on the new era of energy.
Yes.
He couldn't raise money in part because he's an Exxon board member. In other words, he got crossed off, and that happens all the time, even though Exxon is actually trying to forge a new future to a certain extent. And obviously, it's important from its business perspective for the future in terms of carbon capture and sequestration.
So in the last 2 years, we saw about $200 billion of added money in our in renewables decarbonization. The money is there. We're seeing it. We're investing in
but
more
are the
renewables.
metrics right? Is it working properly in terms of the capital flowing to where it can to actually decarbonize our world in the proper way? Or are certain companies that are associated with fossil fuels, for example, just not on the list?
But I think Darren said it really well. The deal worked because the IRA.
Right.
He also said we're going to have to create efficiencies to make it really profitable to meet their
Right.
return on equity, without the governmental subsidies.
But you're the key here, and one of the keys in deciding where capital should flow in terms of these companies that are doing the right thing in terms
But
of
also,
decarbonizing.
he understands the risk of not doing the right thing is horrendous.
First of all, it's our clients' money, and they make the determination where it is. We are seeing more interested parties who invest in decarbonization ever. The key, remember, 2 years ago, the conversation was about divestiture. And we always said, even as much as criticism I got, I always said never divest. Divestiture is a bad thing. We want to be working with these companies alongside. And I think, we're aware of a couple other big projects with other major energy companies. They're going to be moving forward on that, on exactly what Exxon did. And I think this is just the beginning. And that's also a great example of what the IRA is doing to our economy and how it's creating more opportunities. And I think we underestimate the power of the IRA and getting back to what Jim asked related to the difference between the U.S. and the world. We're seeing more foreign companies moving into the United States doing this, whether it's in chemical reengineering or carbon capture, carbon sequestration.
Okay, I want to ask you about a different IRA. I was so glad to hear you were coming on our show. When the IRA was passed, it was about the same amount of money it is now. I'm talking about saving, American saving. 401k, IRA, $6,500. This is ridiculous. You are the keeper of more savings than anyone else. We cannot have Americans save as much as they should with these ridiculously low limits so that people can't put money away.
I agree.
Well, let's change it.
We have to be re-looking at the same time we reevaluate how do we make sure we have more resiliency with Social Security, which I know Congress is looking at. We should be looking at ways to incent more people to save more. I had a conversation with somebody who's very connected to high net worth individuals. And the biggest question they're being asked today is, are men and women who are nearing retirement and they're frightened, they don't have enough. and I think this is going to happen more as we are aging our population. We're seeing more of that fear. And it's our responsibility to make more people, or to help people to be more prepared, that they can live in retirement with dignity and hope, and that they can pass on that hope to their children.
Boy, I'd love to be involved with that. Wouldn't you love to be involved in that project right here, right now with you?
Well, you already have been in a lot of ways.
Well, this is the man who keeps, he is the keeper of the assets.
It's hard not to listen to your comments about U.S. innovation, and the line about cauterizing our differences or challenges is so brilliant. It's hard not to hear that and not think about your stance on Bitcoin. Can you talk about where crypto fits?
Well, I can't talk about Bitcoin because we have a filing with the SEC, so I'm prohibited. I could talk about crypto in general, and I could talk about what we have done. We believe we have a responsibility to democratize investing. And we've done a great job, and the role of ETFs in the world is transforming investing. And I think we're only at the beginning of that. I mean, we believe the fixed income market is going to become multiple $1 trillion in ETFs. Equities will continue. More and more of the market will be delivered through an ETF platform. If you think about what was done 20 years ago now with the advent of a gold ETF. That really democratized gold investing. It brought down the cost of transaction for gold. I mean, the cost of transacting physical gold is absurd. And now with crypto, the idea of democratizing that role, the cost right now to transact is quite expensive. We're talking points, not decimal points. And so that's a big point. Two, over the last 5 years, more and more global investors are asking us about the role of crypto. And as I said, I do believe a lot of crypto is going to be, it's an international asset. It has a differentiating value versus other asset classes, but more importantly, because it's so international, it's going to transcend any one currency and currency valuation. If you just look at the value of our dollar, how it depreciated the last two months, and how much it appreciated over the last 5 years, I mean, an international crypto product can really transcend that. And that's why we believe there's great opportunities, and that's why we're seeing more and more interest. And that interest is broad-based worldwide.
Yeah, it changed the moment you said you were interested in it and maybe realized, like the decision yesterday from a federal court judge, it's here to stay. So let's find a place to do it without worry.
And we have to make sure, and we are working with our regulators, because we want, as any new market, if BlackRock's name is going to be on it, we're going to make sure that it's safe and sound and protected.
Right. We're going to talk about a couple of things that BlackRock does. First of all, it's number one in terms of the actual technology, letting people be able to vote, let institutions be able to vote their issues. But you're also number one in terms of the world advisor. You're playing the role of what J.P. Morgan was in the right at the turn of the century. And I want to ask you, what does a guy like Zelensky do when he talks to you?
We have an enormous responsibility and opportunity. When I had conversations with the president, it was about how do we create a resilient capitalistic system post-war? How do we incent private capital to come into this country? And if we have more private capital, the need for public capital is less. It's no different than what we're trying to do in infrastructure, where because of the deficits that David talked about, if we are going to decarbonize the world, we're going to have more private capital. So in Ukraine, in my conversations with the government, it's about how do we show the world that we're developing a reconstruction fund that is not going to be corrupted by corruption, by oligarchs. Are we able to create a system in which, if we're investing money there as capitalists, we are going to make a fair and just return? And that's what we're doing there in Ukraine. And I must tell you, the government and its finance team are really smart, focused men and women who are trying to make sure when the war is over that we have the construct of a fair and just investment pool. And that will attract a lot of foreign capital.
Larry, you mentioned private capital, and I'm curious about that in terms of not private equity as much as private credit, which has just grown enormously.
Yes.
Do you continue to see it as a growth opportunity for BlackRock? And how do you see it evolving over these next couple of years?
I would say private credit and its role in the capital markets has been a blessing. As regulators put more capital constraints on banks, the beauty of the American system was we had an offset. And that was the capital markets, and that was private capital. And more, we're witnessing more and more opportunities in private credit. That being said, it's a pretty giant movement. And anytime we see a pretty giant movement, are we going to see people oversized?
Right. Or are we going to see more regulation, I wonder, as well? Is that a threat? Or?
I mean, obviously, if we're going to have more regulation, is it going to be in the form of the asset owners, the insurance companies, or is it going to be in the form of the asset advisors? And that's being asked by the FSOC. That's being reviewed right now by regulators of insurance companies. There is no question in my mind that a great economy has a great banking system and a great capital markets. And no country in the world has both like the United States, not even Europe. Europe's rapidly growing. Now, the question is, are we properly maintaining integrity? And unfortunately, you don't know what the integrity is until sometimes it's too late. But the beauty of the beauty of a private credit market is, in most cases, it's non-leverage. Okay, but if it's in an insurance company, it could be levered, and so it depends on where the leverage is. Typically, if we have like a pension fund investing in private credit, well, it's one liability against one asset, and if they lose money on credit, that's no different than anybody else. But if there is a leveraged institution that's leveraging it 5 to 1, 7 to 1, okay, there lies the issue.
Right.
At Blackrock, we don't do this with leverage, and so.
Right.
Listen, I know you have a heart out. I want you to tell people how much better people do in life if they're optimistic.
If they're
optimistic.
I think the results of the first 6 months really shows it. I say you have to be in the market. You have to be optimistic. When you think about it, we were down 20% in the S&P over 12 months last, and everybody was just cathartically and frightened. And now we're up 15 or 17% year to date. And so most people don't know how to market time, and most market timers don't do a particularly good job. And so you have to be optimistic, and you have to believe in our country.
Wow. And we have to end. Let's just kill it. Took the day. I was supposed to have the day off. I heard you were here. I don't take the day off if Larry Fink is here. Larry, thank you so much for coming in. BlackRock is an amazing company, and you have done an incredible job.
Thanks, guys.
Thanks, Larry.
Wow.